Well, this situation is pretty crazy. Let me be clear. I don't mean that figuratively, I mean that very literally. Unless you've been living under a rock, you're probably aware of the chaos currently going on in both the stock market and the economy because of this trade war. It doesn't take much research to see that emotions are very high. I know many of you watching this aren't going to make it all the way to the end of the video, so let me make one thing crystal clear right here, right now. The absolute worst thing you could be doing as a trader or an investor is panic. As an active trader, there are countless research articles that suggest retail traders make their largest gains in high volatility environments, and congrats, that's exactly what we're in right now. As an investor, there's even more research articles that suggest selling into panic is the worst thing you could be doing. If anything, you want to flip it on its head, these are the times where everyone's screaming, everywhere is just doomsday. Those are the best opportunities to get in on your favorite blue chip stocks. Long-term investment, you're getting in cheap. This is the time for intentional, concise, measured moves, because if you make the right decisions right now, the returns in the future could easily be massive. And now for the rest of you who are curious about what to pay attention to for the upcoming trading week and my own personal trading plan, that's where we're going to get into. But before we do that, if you enjoy these type of market breakdowns, don't forget to like, don't forget to subscribe. And with that being said, let's rock. To set a better foundation for this video, we're gonna have to rewind a little bit to see how the world's largest casino closed on Friday, and in case you missed it, it was pretty horrific. Dow drops 2,200 points on Friday, S&P 500 loses 10% in 2 days as Trump's tariff rout deepens. Taking a look at the heat map of the S&P 500, it is nothing less than a crime scene, except this time around, the person or thing that was murdered was our investment accounts. I mean, seriously, you have to look long and hard, even do a little bit of squinting to find even a glimmer of green in this heat map. By the time the dust settled, the S&P 500 was down by just less than 6%, the Nasdaq 100 was down by just over 6%, the small cap sector was down by 4.5%, and this is actually insane, volatility, VIX, was up by almost 51%. I wasn't joking when I called it a murder scene. I should also call out right now in real time as I'm filming this, Bitcoin is actually officially diving, so maybe it'll be repaired by the time you're watching this video, but that is not looking good by any means. As we always do, I want to let you know about the influences outside of this tariff war that you might want to be paying attention to for the market for this upcoming week. I do want to let you know from seasonality, April is a very bullish month. If you look at it over the past 5 years, clearly a bearish month, and actually the week that we're about to head into is the fourth most bullish week of the entire year. Now remember, seasonality is not the end all be all, but it's good to know the tailwinds and the headwinds for the overall market. On top of seasonality, we do have other important macroeconomic data drops this week, specifically the FOMC meeting on Wednesday, April 9th. We have the CPI inflation report on April 10th, and then we have the PPI inflation report on April 11th. So basically, we're going to get a better understanding of what in the world is going on in the mind of Fed members, and we're also going to get a little bit more clarity on the current state of inflation. Like I said, I wanted to quickly get through that because it is important for you guys to know, but I know most of you watching this are really here for what in the world is going on with Trump's trade war. In the matter of days, outlook shifts from solid growth to recession risk. That is the R word that no one wants to be hearing, and it is causing havoc. Hedge funds hit with the steepest margin call since the 2020 Rona crisis. It's even getting so extreme that Vanguard is emailing all their clients begging them to not panic. Vanguard emails clients asking them to quote unquote resist the urge to deviate from their financial plan as markets fall sharply. So we're hitting record highs in margin calls, we're hitting record highs in emotional panic, and a fair question is it warranted? And I would say yes. The US stock market has lost $11.1 trillion in 44 trading days, which happens to be equivalent to 38% of the US's GDP. Or if you want to see that another way, and this gets really brutal, from the all-time high, the S&P 500 is down 17.5%. The tech sector, the Nasdaq 100, is down 21, almost 22%. And then the small cap sector from its all-time high at one point was down 28, but closed around 26%. So I would say, yeah, it's pretty fair that people have a heightened sense of emotion and are asking the question, what in the hell is going on? This probably won't make you feel any better, But apparently no one saw it coming. Market crash was not a part of Trump's strategy, says top White House economic advisor. So that should obviously help you sleep better at night, that this was not in the plans whatsoever. But it is what it is. Trump's tariffs were expected to boost the dollar, but recession fears are dragging it down. It's to the point that JP Morgan raises the recession odds for this year to 60%, as in it's more likely than not that we will now be having a recession. But what's strange is the administration is saying no. Bessent, the Treasury Secretary, is defiant on tariffs as he rejects a US recession. I'm going to take a quick time out right here and ask you guys all a question. Do you think we are heading to a recession? Do you think JP Morgan's right? Or do you think that the administration's right and everyone's blowing this out of proportion and it's going to be fine and we're not going to go to a recession? Obviously, I would love to hear from you in a comment below. All right, so back to what we were talking about. Right now, there's a lot of chaos because of the uncertainty and really the extreme nature of this Trump trade war. And the people who were supporting it were saying we have to be that extreme to get people to come to the table. And within one weekend, there are a lot of countries saying, hey, we would love to speak with the president. This was from just this morning. Over 50 countries have reached out to President Trump to negotiate new trade deals.
I got a report from the USTR last night that more than 50 countries have reached out to the president to begin a negotiation. But they're doing that because they understand that they bear a lot of the tariff. And so I don't think that you're going to see a big effect on the consumer in the U.S. because I do think that the reason why we have a persistent long-run trade deficit is these people have very inelastic supply. They've been dumping goods into the country in order to create jobs, say, in China.
So we're kind of awkwardly between a rock and a hard spot. If you're looking at the market, we're seeing official bear market type of numbers. On the other side, we're being told from the administration that everything's hunky-dory and don't worry about it. Regardless, out of the 50, there's obviously a lot more, but some of the most noteworthy are Vietnam. Breaking Vietnam has sent President Trump a letter offering to remove all tariffs on U.S. imports after Trump imposed a 46% tariff on the country. Taiwan eyes zero tariffs with the U.S. pledges more investment. Breaking, India is negotiating a bilateral trade deal with the U.S. and is unlikely to immediately retaliate against President Trump's tariffs. On top of that, we're also hearing similar news from both Israel and Argentina. Those were some of the main ones, at least at the point that I'm filming this video. But, and this is a pretty big but, not everyone is bending the knee to Trump. EU seeks unity in first strike back against Trump tariffs. The European Union agrees a first set of countermeasure targeting $28 billion worth of US imports. And even bigger than that is the fact that China is not stepping down. China wanted to negotiate with Trump, now it's arming for another trade war. China pledged decisive action to defend its economy a day after unveiling levies on American goods and export controls on rare earths in response to Donald Trump's tariffs. Beijing will continue to take quote-unquote resolute measures to safeguard its sovereignty, security, and other interests. So the TLDR is that some smaller trading partners are already capitulating to what Trump wants, but some of the biggest ones, such as Canada, the EU, and China, are saying, honey. From market close on Friday going into the weekend, many traders and investors and bankers and hedge fund people and anyone looking at their portfolio was hoping that some sort of deal would be struck before things really get out of hand. And unfortunately, remember, don't shoot the messenger. I have to be the person to report that it looks like no deals are going to be made this weekend and probably not even necessarily this upcoming week, once again with respect to some of the biggest trading partners. China investors brace for ugly Monday on US tariff retaliation. According to a CBS interview from this morning, the US Secretary of Commerce, Lutnick, said April 9th tariffs will not be postponed. And on top of it, from the US Treasury Secretary, Bessent gave no indication that President Donald Trump was willing to back down on the sweeping new tariffs he introduced last week. So it looks like they are here to stay, at least for a little bit. So basically, yeah, volatility is here to stay. For my active traders watching, you should be both mentally and financially prepared for the fact that on any given day, we could easily gain or lose 2, 3, maybe even more % in an individual trading session. Obviously, you should always respect your risk and you should probably size down your bets, because if you could get on the right side of the proper trend, at least for whatever time frame you're paying attention to, you can make a massive return. And for my investors, this is not the time to panic. If anything, history teaches us these are the times where you have to be very meticulous about what you're doing, but panicking is the worst option. Over the last 75 years, the average inter-year market drop has been 14%. If you are overly stressed out about the current 17% drawback, the stock market isn't for you. Downside volatility is the price investors pay for long-term outperformance. Or to flip that another way is when you see these dips getting to those average drop levels, it's mathematically a great time to purchase some of your favorites. And you definitely got to check this out. This honestly might be one of my favorite indicators. What if you invested in the S&P 500 every time the US news channel, CNBC, reported that the stock market was in turmoil? In that case, your average return after 1 year is equal to 40% with a win rate of 100%. As in, thus far, it has not missed. You've probably heard this a million times before, but let me remind you of a famous quote from Warren Buffett, one of the legends of Wall Street. You need to be greedy when others are fearful, and you need to be fearful when others are greedy. Right now, we are effectively at peak fearfulness, so this is the time for shrewd investors to be greedy. Now, I know you're probably thinking,
hey man, that's a great saying, but is there actual truth to it? Does the Omaha, Nebraska actually know what he's talking about?
Well, this table just came out, and I would say yes, because guess which billionaire, putting his money where his mouth is outpacing all other billionaires. Year-to-date change, losing billions. You know the one guy who's making billions? Warren Buffett. That is incredible. Anyway, that's what I have for you. I appreciate your time. I appreciate the good vibes. And I want to remind you, be prepared for a crazy week. And you have the skill set to be successful in this environment. Just keep the trains on the tracks. I'll catch you in the live show Monday to Friday, 9 to 11. Hope to see you there.